Hi and good afternoon, everyone. May I get a sound test, please? Okay, great. IDST course, one of three. Okay, guys, welcome to the Advanced Day Trading Strategies course for September. This is a class that we pretty much run every 2 months, as close as possible following the Star Trader class, because many of the strategies that we use, that you use while going to the Star Trader class, is actually are actually being applied and developed in this course. So today, tomorrow, and Wednesday, we're going to go 3 days in a row, 4, 5 to 7, and talk and develop advanced day trading strategies. Let's start today with actually a very, very simple question. Okay, especially for those that this is especially for this question is intended for those who just finished for the first time the Star Trader class. What is the one most important parameter for a day trader? And at the bottom you can see plenty of parameters, but think about it. For you guys, if you had to choose one parameter, okay, and follow that one, which one would it be? And you have plenty of parameters from various classes, and you need to decide. Charlotte says risk reward, Joy says trend, Nazrul says daily range, Silvio says risk management, Steven says trend, volume, and so forth and so on. Okay, so basically everybody thinks differently. Volume and VWAP, I said only one, Vincent, one. So it's either volume or VWAP. So it cannot be VWAP. VWAP is not, let's face it, it's not the one most important parameter for a day trader. Okay, that's for us as day traders, it cannot be the VWAP. Let's face it. Market direction. It's very important. I agree with Jack that says market direction, but let's face it. When you're trading the U.S. markets, you're trading a market that's pretty much 10,000 shares. So market direction is great, but you do have to dissect amongst 10,000 shares every time you take a trade. So out of, let's say the market direction is sharply higher, and out of those 10,000 shares, 9,000 or let's say 7,000 are moving up. Which of these 7,000 are you going to pick? So market direction is, it's not something that immediately tells you where is the best place to go and look for a trade. David, have a great afternoon. Again, guys, let me remind you that this session is being recorded by Clifton, and if you need the recordings or you wanna or you cannot attend the full session today, or anyway, for whatever reason, doesn't matter. You just need to email Clifton, and he's going to have the recordings ready for you tomorrow morning. So let's go back. We don't send out a copies of the slides, but we do send out recordings of the whole session, Goodwin. That's Tradenet's policy. Okay. Again, you can have the recordings. If you can record it on your side, great. If you can't record it on your side, Clifton is doing it for everybody. So just email Clifton, and is going to reply with the recording, which are basically recorded on Webinato. Anyway, so we'll see. We'll have the answer for this question in a minute. But if you took the start of the class, you already know that buy definitely involves a trend and a technical pattern. So those who took the start of the class, hopefully everybody that is taking this class, and if you didn't take the class, I strongly suggest you do it. We want to most of the time buy a stock that has a trend on the daily chart, and we want to base our entry on a technical pattern, either on the daily chart or on the intraday chart. So if you have a pattern that's, for example, long 60 on the daily chart and long 60 on the intraday chart, that will be the perfect combo where the breakout level on the daily chart matches the breakout level on the intraday chart. Most of the time, it's going to be also a round number or a very round number, something like 20, 30, 5, 10, 100, 400. Round numbers are super important. I forgot to put this as a parameter. Again, round numbers are very important for day traders. We pretty much use them all day, every day when we trade the big movers. Wow. Tesla is now at 422. Unbelievable. Up like $60 today. Wow, really. Anyway, let's go back to our business. This is an example where you see the chart here in the room, and you can see the chart that it's a daily chart, of course. You can see that it shows a clear uptrend, and you can see, of course, some entry points. It doesn't matter the symbol or the entry points, but the idea here is that we follow strength on the daily chart and try to enter based on daily and, like I said before, intraday charts. And the best will be when both converge, meaning daily and intraday charts converge. Okay, I'm not talking about a risk reward, of course, at this point, but only on a simple patterns on the daily chart. Now, before we answer the question, take a look, guys, on this chart. Okay, and let's ask another question. What are the standout features of this daily chart? Take a look very carefully at this daily chart, and there's something very unique to this daily chart. Okay, if you really observe what's going on this daily chart, you see that that something is very distinctive, meaning the stock goes from trading no ranges and no volume to big ranges and bigger or extensive volume. So big ranges, bigger volumes, then nothing happens, meaning no range and no volume, and then the stock changes its behavior again and starts developing bigger ranges and bigger volumes, or super ranges and super volumes. Now, remember who we are. Okay, we are day traders. We pretty much look at the stock, analyze the daily chart, but basically what we do here is trade the intraday chart. We don't trade or look for entries that are based on the daily chart. We look at entries that are based on the intraday chart. Now, if we're looking at this chart, it's clear, okay, that the possibilities for us are endless when the stock is moving on a day like March, at the beginning of March of this engulfing red day, and another leg to the downside. Before that, 3 out of 4 green red days to the upside, versus then moving sideways mid-March and mid-April on absolutely no daily ranges. So if we're looking at this chart, it's clear that we would look and definitely prefer to trade those big range days that are also accompanied by big volumes or bigger or increased volumes. Now, nobody's going to pay us to trade a stock that basically trades higher volumes. So nobody's going to pay us money to trade Citigroup or Cisco or Oracle or AMD or any other stock that develops bigger volumes or has millions of shares traded every day. But the daily range is not big enough, versus others. So the idea here is very simple. Okay, we want to look at stocks that develop on a given day a big daily range. Most of the time it's going to be accompanied also by bigger volumes, but it's clear that our profits are going to come from trades that are moving more than average. So if you want to make money on a stock like this one, it's clear that we want to pick a daily range or trade a daily range which is bigger than average. So basically, here lies the very simple idea where we start our journey looking for stocks where the daily range is bigger than their average daily range. And as a byproduct, there is more volume. I cannot refresh it. Everybody sees this one. You need to refresh, Oded. If you cannot see it, go in and out of the room. It's the issue is on your side. All right. So again, let's clear things out. We want to trade stocks that have good liquidity, no spreads, a good intraday trend, a technical pattern, good risk reward, at round numbers, and many other features. But the bottom line is that we can have all those ingredients on a stock that's moving 20 cents per day, and we can have the same ingredients on a stock that's moving 200 cents per day. On a stock that's moving 20 cents per day, our ability is to make, let's say, out of those 20 cents, let's say 10 or 15. And on a stock that's moving 200 cents, our ability is to do, instead of 200, maybe 100 to 120. And the difference here is the difference that can create for us as a day trader the ability to profit. Okay, we cannot profit, we won't be able to profit when the daily range is 10 or 15 cents, okay, versus a stock that has the same, pretty much the same parameters, and the daily range is 10 times as much. And hence, the daily range is a very important feature for us as day traders. So if I want to summarize so far what we're looking for as one of the most, if not the most parameter for a day trader is the daily range. Now, if the stock trades 50,000 shares and the daily range is $100 and the spread is, I don't know, $3, okay, this is not what we're looking for as day traders. But given the same parameters, okay, we want to trade a stock that has a bigger daily range than average, okay, which is also accompanied as a byproduct by, of course, bigger volumes, and then apply all the strategies that we learned during the Star Trader class, for example. So buy a reversal, buy a breakout, trade with the trend, use the SPY, enter at a round number, use smart risk reward, use the timing during the trading day. Basically, try to take advantage of all the things that make us, better than others when we're given an intraday trading opportunity, because many other traders swing traders, investors are not really looking to take advantage of those intraday moves. Many traders, of course, are trying to take advantage, and the benefit for us is that if we are following the stocks that institutional traders are trading, and those guys don't trade for the intraday, they trade for the midterm or very long term, and we can enter alongside them, okay, and get a good move intraday, while we exit after 50 cents for a partial, those guys will exit after 5,000 shares, for 5,000 cents for a partial 6 months later. Okay, maybe they will get to those 5,000 cents, maybe they won't. We are interested first of taking our 50-cent partial and moving on to the next trade. So what are the standard features of this daily chart? Again, this stock swings very aggressively, or let's call it even neurotically, from absolutely zero movement, zero pulse, to let's call it 120 pulse. Okay, so in the beginning of March, it spikes up and down, then moves sideways, nothing happens. Then it moves up, then sideways, then up, and then at the beginning of July, it spikes up on 120 pulse and again moves down. Those are the days, mid-July and mid-March, those are the days, early July and early March, those are the days that we want to trade. Okay? Those are the days that we want to trade, and then those particular days, we want to apply the strategies that we used and learned during the Star Trader class. Now, our mission as a day trader, okay, let me go back to this chart, okay? It's very important to understand that you're looking now at a chart that's on the daily, okay? But we are day traders. So if we see that the daily chart by the end of the trading day, okay, that's a signal for the day after, but basically, if you want to be in a trade, for example, March, let's call it March 2nd, on this very strong green upside bar after 3 green bars, okay, which is also a breakout bar. Anyway, you want to be in this trade, okay? You want to be in this trade as early as possible, okay? How can you detect and predict that this trading day is going to be the day that you will need to trade? Okay, you need to figure out this trading day as early as possible, and because if you're going to watch it on the daily chart, well, after the daily trade, the daily trade is or the day trade is over, it's not going to do you much good. Okay, so again, it's very important to find this chart or find this intraday chart to trade as early as possible. Okay, and if you can find it as early as possible, you can take advantage of the technical patterns that are available on this chart, and we were going to discuss these technical patterns in a split second. But the idea here is to see the patterns and to observe this chart not at 3 p.m., not at 3:30 p.m. You need to take advantage of this upside move as early as 10 a.m., maybe even 9:30. Okay, so there are ways, okay, very simple ways where you can find this chart and start trading it very early. Now this is pretty much how this chart works. You can see again, using the patterns and strategies that you learned during the Star Trader class. A is a breakout trade, a cup breakout. Then B is a reversal trade, and C is a breakout. D is another cup breakout. E is another cup and handle breakout. Sorry, reversal. It's not a breakout. And I'm just, mentioning only 1 to 5 potential entries for this stock. but there are actually much more. If you look at the chart, there are also VWAP reversal trades. This is also a topic that we're going to discuss tomorrow or Wednesday. Again, the idea here is to take advantage of the chart as early as possible, okay? However, again, this is not it's not possible to take advantage of the chart if you're going to look at the intraday chart. You need to make the observation on the daily chart. It's a very simple one, and then switch immediately to the intraday chart. How do we do it? Using pretty much the topics that we're going to learn today. Momentum stocks. And again, why do we need to trade momentum stocks? That's the first topic that we're going to go through today. And the second topic today is taking reversal trades with momentum stocks. Now, what is the definition of momentum? Okay, what is the definition of momentum? We define it as the combination or the combo of increased volume, let's call it 3 times or more, and increased daily range, let's call it 2 times or more. So the combo will always be, okay, volume plus daily range. This is pretty much momentum. Now, doesn't necessarily needs to be volume 3 times and daily range 2 times. It can be volume 1.5 and daily range 5 times, okay? Because the more important thing for us is daily range, because this is where we make our money. We're getting the confirmation from the volume side, because we will take trades, or we will feel more confident taking trades when there is a significant increase in volume on the, and we observe it on the intraday chart, okay? But it's very easy to observe it on the daily chart. Now, again, our mission is to take advantage and observe the move as early as possible, and not to wait until the last hour of trading and then figure out, okay, Tesla is along at 410. But basically, Tesla today, if I'm going to go to the Tesla chart, okay, guys, this is the Tesla chart. You can see it in the room. Hold on a second. Now, do we see a bigger than average daily range in Tesla? Do we see a bigger than average daily range in Tesla? What do you think, guys, today? Is Tesla going through a bigger than average daily range? Well, if we're looking only at this month, it's not very easy to observe, okay? If you're looking at this month. If you go back 2 or 4 months, look what happened today. Today, the daily range was 373 lows, 350, 420 highs. So that's nearly $50. If you go back to 3 months ago in June, I'm gonna just pick up at random a daily range in mid-June, then it goes from 187 to 197. So that's $10 versus $50. Okay. Email Clifton's email is clifton.casida@tradenet.com. Again, clifton.casida at tradenet.com. Bob. Casida is CASIDA. All right. Just email him. Okay, I can type it. Okay, here is the guys are faster than me. Thanks a lot, Nazrul and Bob. And again, guys, do it tomorrow morning. Thanks a lot. All right. So again, if we're looking back at the Tesla chart, it is very easy to see that the the range bar today, September 14, is bigger than average. Although let's face it, Tesla has it's been going to this momentum days pretty much every day since I don't know, mid-August. Again, this is why one of the reasons why we trade Tesla every day, because it's going to these insane moves where the stock is so volatile. All right. Now, Tesla is a day trading stock. This is what we continue and say and pump it because it's the best trade in the markets. Now, again, maybe because Tesla is going every day to a momentum day, it's not a good example. Let me go to, for example, SGMS. Okay, now this is the SGMS. That's a stock that I started trading today, early in the morning. Now, if you look at the feature of SGMS, again, you can see the pickup in volume versus average, okay? So it's very easy to see, even early on the day, that the volume is already at 10 a.m. in the morning, ignoring the gap up, okay? Let's say I ignore the gap up. The volume is already 3 or 4 times the average volume if I'm looking at the volume in SGMS. Now, if I'm looking at the daily range, now let's go to the intraday chart. It already went through 24.50 to 29. That's $4.50 at 10 in the morning. So already I have more volume and more range than on any other given day going back months in a row on the chart. So it was trivial that I'm looking for a trade in SGMS, and being that I'm using the technicalities or the strategies that that I learned in the start with the class, this reversal trade at 28 is a great entry. And I already started at the 27, don't remember what was my entry, 27.60 or something like that. Anyway, SGMS, okay, fits my strategy or our strategy for a momentum stock. Okay, where the volume is twice or more the average, the more the better, and the daily range is more than the average, twice, 3 times, 5 times again, and then we apply the strategies that you learned during the start trader class. And those are the strategies that we pretty much do every day in the day trading. There are no other strategies. Maybe some versions of them, but the basic strategies are those strategies that work pretty much all day, every day. The same strategies. You don't need to invent yourself or invent new strategies every day. You just need to apply them at the right time, at the right stocks, and then things will work out. I mean, sometimes they don't work out, and then the business of you as a risk manager is to lose less than when the trade works, and then you take advantage of the market and the stock, and hopefully the risk reward on each trade is more than 1-to-1. Anyway, this is pretty much the idea. Momentum is the combo of volume and daily range, where again the numbers are not written in stone. I mean, those numbers can change. Volume is important, but it's not super important. Daily range is super important. Okay, daily range is super important. On top of that, guys, you have the strategy, your strategy. Reversal, breakout, VWAP trades, double bottom trades, bear flag trades, bull flag trades, whatever you want to trade, or you can trade trend trades. But you can find the better trades using this very simple strategy where you find out the best trades in the market. Let's see an example. Okay, let's see an example. This is overstock. Okay, this is overstock, and we're talking about the daily range, the trading day of August 17. You can see it on the bottom chart. The bottom chart is the daily chart. The upper chart is the intraday chart. Okay, so momentum is the combo of volume on August 17, 13 million shares traded, plus daily range, in this case $20, versus the average of 5 and 6. So the volume is nearly 3 times as much, the average range more than 3 times as much. And the result, you can see that the stock starts trading at 100 at the bottom, trends pretty much higher all day and ends up to nearly $20. Now, for us as day traders, okay, this chart is a golden chart where you have a clear trend all day. There's no there are no reversals. The trend is higher all day. I hope nobody is arguing with the trend. And now it's up to you as a day trader to find those entry points that suit your strategy. Breakout, reversals, whatever, okay? But it's much simpler when the market is helping you, or in this case, the momentum is helping you. Now, how easy is to find OSTK on, what was the date? August 17. How easy is to find OSTK and trade it on August 17? How can you find it? Where do you find it? Where do you find OSTK on August 17? Assuming it's not on your watch list, okay? Assuming it's not on your watch list. If it is on your watch list, of course, it's easier. One of the places will be the top 20 list, okay? One of the easier ways to find winners is the top 20. Now remember, on the top 20 list, there are 80 stocks, okay? Actually, if you include those that go up in volume, 160 stocks. Okay, so it's not very easy to find OSTK. Okay, it's not very easy to find OSTK out of 160. It's easier to find it out of 80. Again, if you have some preparation and you traded OSTK before and you know the potential in OSTK, it will help you focus on that stock. So basically, if this is a stock that you never traded before, probably you're not going to go and look for it. Okay, if it is a stock that you traded unsuccessfully before, probably you're not going to go for it. If you are a day trader that traded successfully and you recognize the potential in OSTK, fine, it's easier. The idea here is to use the daily chart, okay? You don't make the decision on the intraday chart. First, you look at the daily chart. And if you see very early in the morning that, in this case, OSTK gapped up, okay? OSTK gapped up, and it's up, I don't know, $3, or in this case, let's say 5%. You see already that the volume is bigger than average. You see that the daily is very strong, okay? Then you have the opportunity and the wisdom to switch to the intraday chart. But this needs to be done as early as possible, okay? If you do it at 10 o'clock in the morning, it's better than versus doing it at 2:30 in the afternoon. Now, it's possible, okay, to look for pre-market movers, but those movers, Patrick, are also going to be in the top 20. So sometimes a pre-market mover on very low volume can be a misleading lead, or let's call it a misleading pattern or a misleading signal. Okay, so I suggest don't trust the pre-market. Okay, don't trust the pre-market unless you are very familiar with that particular stock. Okay, so I will leave it at that. I won't trust the pre-market on most of the stocks, especially not those days, and stick to the top 20. If the stock is not on your watch list and it appears on the top 20, and this is a stock that you're familiar, it takes basically 1 second to post the daily chart on your from the top 20 into your platform. Just right click, you see the daily chart. Okay, you see the gap up or the gap down. You see the pickup in volume. You see the relative daily range, and then you decide, okay, it looks great. I'm moving into the intraday chart. And if you do it very early in the morning, here it is. Now, if you prepare yourself, sometimes you already have those potential trades before the market opens, just watching the top 20 in the pre-market. But I won't trust the patterns in the pre-market, okay, to be the ones that you're going to trade. That is something that I won't trust. Let's summarize what we've seen so far. What are momentum stocks? Okay, momentum stocks, again, a very simple definition, the combo of increased volume and increased daily range, where we prefer to see more daily range as early as possible. Okay, and again, detect it as early as possible. Now, look at this chart, guys. This is again OSTK August 17. Look at the daily bar, and look at the volumes, the volume associated with it. In this case, 13 million shares. Now, let's go back and take a look at August 14. That's the previous day. Okay, on previous day, it trades the average volume 5 millions, the average daily range $6, and take a look at the intraday price action. So if you look at this intraday price action for OSTK August 14, take a look at this chart very, very carefully, even in retrospect. Okay, how many potential trades, long or short, do you see on this chart? Ignoring the outcome of them, how many, okay, do you see? And of course, that's not going to be out of outcome, because the daily range is pretty much nothing, okay, for OSTK. Okay, but take a look at the intraday chart, which is the chart that we are trading, and try to figure out how many potential trades do we see on this chart. I can tell you upfront that I see maybe one in the morning, this breakdown under 93. This breakdown under 93 early in the morning at 10:30, where the stock drops very, very fast, $2, and immediately ricochets up. And then the volume pretty much dies to zero over lunch. The stock moves sideways then from 10:30 until 2 p.m. and then moves up from 93 to 95 and comes back to 93. So that's it. Okay, that's it. So there is 4 minutes to the downside early in the morning, and then a leg up of about 30 minutes in the afternoon, and most of the trading day is spent sideways. What do you mean? Can you define daily range? The daily range is on the daily chart, the difference between the high and the low of the day. The daily range is the difference between the high and the low of the day. Let me give you an example. If I'm looking at the SGMS today, just pointing, sitting on the daily bar. I'm pressing, and then you can see high of the day 28.77, lows 24.52. The range is 28.77 minus 24.52. That's $3.25. Not the average, the true range, TR in this case. The range, again, like I said, the high minus the low. High of the day minus the low of the day. In this case, again, the high of the day, 20, high of the day. Low of the day. That's the low of the day is 24.52. That's the range. Very simple, very simple. You cannot get a definition that's easier than this one. Okay, it's not happening. All right. High of the day minus the low of the day, and you need this number to be significantly bigger versus the average. Now, what is the average? You don't need to actually compute the average. You just look at the chart. I mean, I'm looking at the chart. Do I see going back 2 or 3 months, even one day, even one that's even close to this true range today on SGMS? Okay, not even one. Do I see even one trading day where the volume is even close to today's volume? Not even one. Okay, so it's the volume is I don't know, 10 times the average, maybe more. The range, let's say 5 times. What do you mean, Brian, the day before? This is today. This was today. This volume bar was today, and this daily range was today. And I can pick it up very early in the morning because it's significantly higher from the previous day. So the volume today at 10 o'clock in the morning is already bigger than the volume of all the previous 3 days, 3 months. Okay, so it's very significant on the daily chart. Okay, I cannot observe it if I'm looking at the intraday chart. This intraday chart is not telling me much. Okay, but if I'm looking at the daily chart, I see the relationship of the volume bar and the daily range. Again, I'm not talking about the pre-market, guys. Forget about the pre-market. Okay, sometimes there will be volume in the pre-market, but this is something that I'm not asking you to wake up at 8 in the morning and start browsing the pre-market. There's plenty of time from 9:30 until 4 p.m. Okay, plenty of time. Sometimes so happens that a stock moves in the first 20 minutes or 30 minutes and then it's dead for the rest of the trading day. You know, tough luck. That's our luck with SGMS today. Now, again, the idea here is to take advantage of the daily chart. But you don't trade the daily chart because you're a day trader. Okay, so you take advantage of the daily chart, but the entry point is not on the daily chart. That's not you or me or anybody that's day trading. Now the business is finding an entry on the intraday chart. That's something that we pretty much train and do every day, tens of times in the trading room. And the strategies are the same strategies that you learned in the Star Trader class. Okay, so if you use the Star Trader class strategies, breakout, reversals, that's pretty much all you need. You don't need more. You need to not need to invent or reinvent the strategies every day. Yeah, let's take a look, for example, at DKNG. DKNG. Okay, and the answer is, of course, Look at the volume bar at the bottom. Probably the best volume bar in the last 6 months. Obviously bigger than average. The range bar, what about the range bar? The range bar today is 40.33 to 49.30, so $9. So that's show me one daily bar going back 4 months or 3 months or 2 months where the RAM, you don't need even to look for, it doesn't matter. The relationship is what matters. So it can be 50 cents versus 10 cents, $50 versus $10. All you're trading is the relationship. Okay? The relationship is what is important, not the true range. Okay? The relationship is what you trade or we trade. Now, if the stock trades 5 cents versus 50 cents, it's maybe something that we won't take into account, but 50 cents versus $5, good enough for us. We don't need a $20 trade every day. We can definitely live very well off a 50-cent trade every day. Maybe one, maybe two. Anyway, it's clear that DKNG is a winner today. It has the breakout trade on the daily chart, which is of course a strategy that it's being used in the Star Trader class. And now the strategy on top of that has the momentum stock. So it's if you're using the Star Trader class, okay, and it's in the Star Trader class, you learn, okay, we're buying the breakout on the daily chart. Okay, now you have two stocks. One that's a momentum stock that breaks on the daily chart, and one which is not a momentum stock. And now your option is to trade one or two. I suggest you prefer, okay, the one that has the momentum stock, okay? It's not necessarily the one that's going to make you money, because then you go and you look at the intraday chart, okay? And now the money will not come from the daily chart. Okay, this is something that we look at, but we don't trade. Okay, now we switch to the intraday chart. So obviously, let's see. The breakout at 45 on the daily chart, take a look at this example, Nazru, guys. Take a look. 45 is the breakout to all-time highs on the daily chart. And this is the entry on the intraday chart. Now, is this a good entry on the intraday chart? Is 45 a good entry on the intraday chart? What do you think? Is 45 an entry, good entry? No, it's not. But again, at 42 or at 41, the stock is dead. Okay? If you ask me, okay, before the stock makes its move, the stock, look at the volumes, guys. Okay, before, let's do something like that. Let's, before the news are coming out at 12 noon. Look what happens in DKNG. No volume, no range, no trend. Okay, so why would we trade DKNG at 12 until 12? If anybody was looking at DKNG, I would have said, I think most of you would have agreed that there's nothing. But there's nothing at 42. Okay, then at 12, I don't know, 12:05, 12:02, something happens. But the stock moves in 6 minutes, $5. So if you're not in the trade, then you're facing the decision to buy the 45 with a $3 stop loss or $4 stop loss, whatever. It's like, so that's shameful because this one was triggered by news. Okay. Again, I'm not surprised that it's triggered by news because DKNG is such a hot stock and pretty much one of the most, I guess, aggressive stocks lately. Again, you look at the daily chart, almost every day there's something going on, almost every day. And if I was attuned and prepared before the trading day for 45 on the daily, then I would have probably looked different at this 45 here. But let's face it, um, it's looks like a very late entry. It's it's not even a bull flag formation. It's like a straight up and then sideways move. Okay, so shame on us or shame on DKNG for not creating the right signal before it moved up. But nevertheless, it's still a trade that's a momentum stock on the daily chart. Now, like I said, the money is not observing. The money is trading. And if you look at this chart, obviously, then it moves over 47 and still makes another two more dollars before pulling back. Again, wow. Again, there was nothing in the stock when you traded it. You should not have been in the trade because there was nothing to trade in DKNG. Again, maybe you had 20 cents stop loss, maybe 50, doesn't matter. Why are you trading DKNG when the stock is moving sideways for 3 hours? Why are you spending time instead of not spending time on better trades? Now you're not a prophet. You don't know that this move is going to happen. Okay, this move could have happened at 12. It could have happened also at 3. This is some type of news that came out. Again, sometimes the trend is higher and you get a signal very early. Sometimes the signal is this type of a move where sometimes you cannot enter the trade. But again, if you look at very, very carefully, what do you see here? Okay, it's not easy to see. Okay, you can see also this. I'm talking about star trader strategies. Okay, you can see a leg up and then let's call it a very ugly but still a bull flag. Okay, it's still a bull flag. Now again, is it the perfect bull flag that I want to see, where I'm trading it with very little risk? Not really. But if you look at the if you look at the pattern here, the fast and furious leg up, then the move sideways, the creation of this 2-hour bull flag, that's shameful. Shameful that we didn't take advantage, or most of us probably did not take advantage. Again, the idea here is to track and take advantage as early as possible. Now we're going to see more examples, and you'll see how easy basically the logic is. The concept is very simple, okay? The application is also very simple. You need to do it though very, very perfectly. The perfection of the application is what will bring you the good trades versus the lousy trades. But the concept is very simple. And again, we're looking back at OSTK, going back to the beginning of the year. Let me answer, Vincent. The volume increases before the move. Sometimes the volume increases very early in the morning, and you still are not picking up on the trade. But it's not necessarily that you need to enter with the biggest volume bars at the same time. It's not necessarily, okay? You need to enter when the technical pattern is the one that favors you, okay? I think 99% of the traders could not catch DKNG because it's something that happens at random, and no way you can catch on it. The only way you can catch it is if you have an automated order in the platform. For example, again, let's go back to the chart in DKNG. If you have an automated order at 42, breakout at the highs of the day. So what are the chances that you're going to have an automated order at 42? The stock trades at 41 and basically is doing zero range and zero volumes all day. So you have no signal from the intraday chart, no signal on the daily chart. You have nothing. And if you're trading only DKNG, you're fast asleep or deep asleep over lunch. Okay? And then you wake up, by the time you wake up, it's up $4 from 41 to 45 bucks. Unless, like I said, you have an automated order in the platform, and there was no reason for you to have an automated order in the platform. Guys, this is Clifton again with his email. Please, if you want to request the recordings tomorrow morning, just email Clifton. Thanks a lot, Clifton. So that's, again, clifton.casida@tradenet.com. I'm sure everybody by now knows Clifton's email. All right. So again, going back to OSTK, okay, you can see that every stock goes through various phases. For example, January, February, March, April, until mid-May. What happens in OSTK? What happens in OSTK for 5 months at the beginning of the year? Again, guys, nobody notices. It's a stock that nobody knows that nobody knows the symbol. Okay, the stock trends sideways at I don't know, $10 on no volume and no range and no notifications, and nothing happens for months in a row. Again, nothing happens. What does it mean? Nothing happens. The institutional traders, the hedge funds, the big money are looking at stocks that they want to buy and make money to deliver returns to their customers. And OSTK is not even on their radar. Nobody's buying, I don't want to say one share, but nobody's buying. There are no headlines in the paper, no significant earnings, no hedge fund. Nobody cares at all, good or bad. So OSTK is basically dead for 5 months. And then suddenly something happens. And when something happens, you can clearly see that the immediate signal is the pickup in volume, because it's impossible for one hedge fund to start buying heavily and not disclosing its action to the market. Okay, because again, if I'm buying OSTK 1,000 shares, the market could care less. Okay, but if a hedge fund starts buying and they're buying 500,000 shares or 1,000,000 shares, that's something that is denting already the price action. Okay, and again, a hedge fund is not going to buy 1,000 shares. Okay, they need to buy 1,000 shares per their 2,000 customers. So you do the math. They need to buy 2,000,000 shares. Those 2,000,000 shares are going to make a difference. Okay, so somebody is going to take notice, and then somebody's going to take notice and maybe start mimicking them. Suddenly, we take notice. Sometimes, okay, the move in the stock is accompanied by news. For example, earnings. For example, an upgrade. For example, CNBC. Okay, for example, in this case, the reason is just the coronavirus, where retail shops or I don't know, IKEA all across the United States is closed, and now Americans are sitting at home bored to death, and they need furniture. which is pretty much the business of OSTK. Not very expensive furniture, not very cheap furniture, IKEA type of furniture where it's being delivered to your door. Okay, and those guys start buying and buying online, and suddenly there's maybe a piece of news in the paper, maybe a piece of news in Yahoo Finance, maybe a Reuters report, maybe a Bloomberg's report, maybe an analyst. Something triggers, and then everybody is like looking at the stock. And this is when we are basically looking at the stock as well. Again, it's a very, very simple to observe. Okay, so as early as possible, you can be in this trade as soon as it breaks 10, maybe 20. I think I don't remember. We had a case on this stock when it broke over 25 or 30, like 4 months ago. I have to look, but the case study for OSTK was 4 months ago. Okay, and by then the stock is moving over, I think, I don't know, 25 or 40. 3 months later is at 120, and a month later at 60. The idea here is again that we as day traders, we're not looking at the move from 20 to 120, but we are looking at some intraday moves that will give us over a period of a month, maybe 3 or 4 very good intraday trades. Again, sticking to OSTK, which is a stock that it's not, our number one favorite in the trading room. Still. Okay, so it's clear now, I hope, to everybody what are momentum stocks and why we trade momentum stocks. Okay, because the opportunity in momentum stocks is better for us versus non-momentum stocks. Again, you can see a momentum stock is not a momentum stock that's for a lifetime. Momentum stock is daily definition. It can be a momentum stock today and not be a momentum stock for 3 years following. So it's a momentum stock for one day, and then we don't see or trade the stock for 3 years, and then it's again a momentum stock. Now, if we go back to Tesla, where is Tesla? Hold on a second. And again, the momentum stock is being observed on the daily chart. Now, something is going on with Tesla since it broke 200 2 months ago. Take a look at the daily ranges before 200 and the daily ranges after 200, not to mention after 300. Okay? So this type of an price action in Tesla, I don't think is sustainable. Okay? I don't think it's sustainable. At one point, maybe 2 months from now, maybe 3 months from now, maybe 5 months from now, Tesla is going to go back and be like Tesla of February, March, April, May, meaning it's going to just move in a very, very narrow range, and the volumes will subside. And as long as it is a momentum stock, it's a preferred trade for us. I just gave you an example, Oded, on SGMS. How did I find SGMS from the top 20? Okay. Again, let's move forward with the presentation, because we are just now looking at what are momentum stocks. How do we find momentum stocks in a split second? Okay. So what are momentum stocks? Everybody understands now, I hope. Why trade momentum stocks? Again, very simple. Why we trade momentum stocks? Because the chances of us of making more money is based on the daily range. Okay, if the daily range is bigger, the chances for a trade to continue and instead of moving 20 cents versus moving 50 or 80 or 200 cents increases. That's pretty much the simple math. More daily range and more volume means a better chance for us to make more money because institutional traders are buying more, and those institutional traders are not interested in selling after 20 cents or 50 cents or even $2. They're interested of selling after 500 cents or up 5,000%. Okay, I can guarantee you guys that there are institutional traders that bought this year OSTK at 20 and still have a position and did not sell even at 160 or 150, whatever. They are in for the long run. Maybe they added, maybe they sold part of their positions. I don't know. Okay, there are so many factors involved. But those guys are in for the long term, and we are taking the basic advantage of them. These are the guys that are moving the market and moving the stocks, not the day traders. The day traders are going in and out like crazy. Okay, trying to make a buck every day. Those guys have dozens or sometimes hundreds of positions opened. Some of those positions are losing money, let's say 5 to 10% per position. Other positions are making 100 to 500% per position. Depends on the market. Yeah, you can, again, visit. You need a recording, just email Clifton tomorrow morning. Thank you for that. All right, guys, let's continue. Now let's take a look, for example, at two more examples, and then we move further. We move OSTK September 10. This is the OSTK. This is again the last two trading days, Friday, okay, not today, Friday and Thursday. You can see a reverse hammer on Thursday and a big leg down on Friday on OSTK. I can tell you, and you can see that the hammer is not very easy to trade, but it's a great signal because it closes at the lows of the day. And the hammer is and this engulfing slash piercing line slash big leg down in OSTK is the right day to trade. Okay, so again, September 10, it's up, it's down, the trend is changing from up to down intraday. Not the best trade. What is the best trade? When the trend is lower for 6 hours. When the trend is lower for 6 hours, you have more opportunities. The session today is until 7 pretty much. US time, of course. We're going to take a break in about 20 minutes for about 5 to 10 minutes and then continue until 6:45, 7. Again, if you don't have the time right now, Gulam, for more, you can request the recordings from Clifton. And then watch it over the weekend whenever you feel comfortable. Have it on your desktop, and that's going to be your, again, take it easy. Nobody's forcing you to go through it again today. The idea is that you take the presentation and you go over it and absorb it over some period of time. And of course, the most important thing, practice. So again, if you're looking at September 11, which was Friday, and I'm showing you the daily chart, you can see the huge red bar on Friday. You know already that this huge bar, which is bigger than average range, better than average volume, probably will translate to a better than average trading day. And indeed, it translates to, you can see 1, 2, A, B, C, D, E, at least 5 trading opportunities that I see, just browsing the chart. Maybe there are more, okay? Versus the previous day, September 10, where the stock is going to trend changes, and then, trend changes is guessing time, reversing time. The market is limited, or the movement is limited, and the profits are limited. If the trend changes 5 times or 6 times every day, you know that the profits are limited. You need to be you need to be a very good intraday trader to recognize those trend changes and act, which is very tough. I don't want to say impossible. And again, if you are such a good day trader, why won't you find those trends that continue, or those patterns, or those stocks that have a better chance of continuing and working in your favor, instead of working in your favor an hour, maybe working in your favor 4 hours or 5, sometimes the whole trading day. That's the pretty much what you're looking for. Let's take a look at now the summary of momentum stocks. Okay, we observe momentum stocks on the daily chart. For example, you can see this is June 23rd. The signal is the gap up. Okay, now you can see very early in the morning that the volume is, let's say, 1,000% higher versus the previous trading days. The daily range is immediately bigger. Okay, maybe you cannot observe it in the first 5 minutes, but after 1 hour you can observe it. And then if you observe it after an hour, then you still have from 10:30 until, I don't know, 4 p.m. to take trades in Ino. That's pretty much the strength of momentum stocks. Sometimes the momentum carries over to a couple of more trading days. Sometimes the momentum will die in a day. Okay, the idea here is to take advantage of a particular trading day, and if your strategy is to swing trades, maybe you will swing some of your position, but this is not something that we're going to discuss in this class. Okay, the idea here is we are observing momentum stocks. We're trading momentum stocks according to the intraday patterns that you learned in the Star Trader class. Okay, and we don't discuss swing trades, not at this point. For that, we have other classes. And again, the idea here is that it is very simple, straightforward, very easy to observe, only using two visual parameters, which are again very easy to observe: the daily range and the volume. And again, all you need is to watch the daily chart. If you watch the daily chart, you know that your business is now to find an entry on the intraday chart. And if the intraday chart is complying, in this case, it's complying from 10 in the morning until pretty much, I don't know, 4 in the afternoon, so be it. Now, this is an example from December 6th, 2019. Okay, two examples actually. December 6th, 2019 and February 28th, 2020. On December 6th, we have a big pickup in volume in big, okay? And on February 28th, we have a gap down and still a pickup in volume. Look at the volume, okay, on the daily chart between December 6th and February 28th. Guess what? What are those dates? December 6th and February 28th. What are the guess? Okay, what are the December 6th and February 28th trading dates for big? Yeah, obviously, 90% of well, I don't want to say 90, maybe it's 89, but most of the time, the earnings are going to be the trigger for the momentum, because when our institutional traders changing hands, entering or exiting positions on a stock, on the news day. This is why it is the news day. This is why the volume on the news day is increasing substantially because the institutional traders are assessing the earnings and are thinking, okay, I have, I don't know, let's say $1 million put to work in big. And there are 10,000 other stocks in the US market. Is big my best decision for my customers? Am I going to get paid my commissions holding position, holding money in big versus moving this money to Tesla, mRNA, or Apple? Okay. Now, the question is actually in time. Do you mean for certain stocks, it is better to trade on earnings? Most of the time, no, not it's better. Most of the time, we do have to trade. Yes, we will trade the earnings day after the announcement, of course, not before the announcement. Before the announcement, take a look at the price action before the announcement, at the volume before the announcement, December 6th. What happens in big before the announcement? Maybe there's one good trading day in 6 months, okay, in big. One good trading day, you can see that there's no volume actually. Now, on December 6th, the stock gaps up, let's say in this case, 20%, and the volume picks up 1,000%. Now, my business will be probably to trade this intraday chart, okay, intraday bar. And maybe I will continue trading it for another day or two. All right, but at least the first day. Now, is this a guaranteed thing? Not really, because sometimes, okay, there will be a big leg down on volume or leg up in volume. And guess what? This is how the intraday is going to look. Now I'm going to, again, bring you back to SGMS today. Take a look at big February 28 and SGMS today. Tell me what is the difference. What is the difference between SGMS and big? Because I don't see any difference, okay? The stock is ending up the trading day with a hammer, very big volume, but the outcome for us as day traders is that the stock moved up in the first 30 minutes and that's it, okay? It happens. Sometimes the move in the first 30 minutes is pretty much killing the move for the rest of the trading day. And in this case, it was shameful. Now your question, Gulam, is on earnings day, isn't the stock normally too volatile? Actually, you do want it to be volatile. If it's not volatile, how are you going to make money? If the stock is not volatile, Gulam, how are you going to make money? From a stock that's not moving? So the idea here is to trade volatile stocks that suit your trading strategy, meaning very good volume, okay? No spreads and a technical pattern. Good volume, no spreads, and a technical pattern. And those examples are pretty much, let me go back to, this is an example, hold on. Okay, this is example, Eno, June 23rd. Take a look at this one, okay? The volume versus the previous day, Gulam, up 1,000%. The daily range up, I don't know, 20 times. Okay, the daily before it moves, I don't know, 20 cents. On that particular day, $5. Look at the price action. Okay, what's wrong with this price action? Cup breakout, another cup breakout, another reversal. It's I mean, if you look at the chart in retrospect, I'm just pointing 3 trades, but guess what? There are more trades, 20. Um, 21 here. I don't know. There's so many trades available. Again, volatility is good for you. No volatility, no money. The volatility is going to create your trading day. Okay? If there's no volatility, you don't want to trade that particular stock. Now, too much volatility and trend changes, no good. Too much volatility or better than average or increased volatility and a good trend that doesn't change and stays strong all day or clean or in one direction all day, that's your dream trade. Look at this Eno trade, for example. The stock trades at 17 at 10 o'clock in the morning, and at 22 3 hours later, do the math. It's 17 $5. It's 40 or 50% in 3 hours. That's your dream trade. It doesn't get better than this. Okay? How many times do you get to trade a stock that's $17, up $5 in 3 hours? Not that many. Okay? But this is something that's doable. Very, very doable for a day trader. Okay? So far, it's clear. Questions so far, guys? How do we observe momentum stocks? Why do wanna observe those momentum stocks early in the morning? And again, then we apply the strategies that you learned and pretty much apply to any other stocks, only on stocks that have a better chance of really developing their daily range. Okay, where you have gonna have a trade where instead of moving 20 cents for the partial, you can get a partial after 50 cents, and the trade is gonna work for $2 instead of a normal trade 30 cents. That's pretty much the idea here. Now let's see more examples. In this case, X US Steel, an example from more than a year and a half ago. The momentum stock is clearly observed, guys, on the daily chart. Okay, you can see the bottom right chart, US Steel, the momentum day is happening, and the momentum day does not necessarily need to be at the highs of the formation. The momentum day can be at the lows of the formation. Okay, we could care less. We are day traders. We're not gonna stay in this X trade for more than a day or two. And if it goes in our favor, we take it a day at a time. Okay, we are not investors. All right. Again, the idea here is you can see that the volume is the best ever in going back 6 months. The daily range, the best ever going back 6 months, or in this case, 3 months. So is this momentum stock? Yes, it is. Volume is up significantly, more than 3 times versus average. Daily range, the same. It's a momentum stock. Now, if you look at the upper chart as a stock that you want to day trade, the opportunities are still there. You can buy it at 10, you can buy it at, you can buy it at 16, you can buy it at 15, you can buy it at the breakout at 1650. It doesn't matter where you buy it, that's your strategy. But the opportunity is there. Okay, the trend is there, and the stock closes at the highs of the day. Now remember, momentum stocks, and again, I cannot tell you that 80% are closing at the highs or only 15. Depends on so many factors. But the idea here is that some of them will close at the highs of the day. Some of them will close at the highs of the day, and those 20% or 25% where the daily range is 3 times or 5 times the daily range, and they close at the highs of the day, and you stay in that trade until the close, let's say you don't swing, you're going to feel the power of those moves in your account immediately. Because even if you leave only let's say a quarter of your position to the end of the trading day, and the move is, I don't know, $2 or $3, you're going to feel plenty of movement or of positive movement into your trading account. If you stick to the winner, that's pretty much the idea. And again, it's everybody understands why X is a momentum stock, despite being a very, very weak stock on the daily chart. The opportunity for us still lies within the momentum stock. We could care less, again, if it's a loser on the daily chart. It's a winner for us because it's a momentum stock. Everybody's okay with this definition? Okay, again, we don't need the momentum stock to be very, very strong on the daily chart, as opposed to the definition of buying a breakout trade or shorting a weak stock. So if you look at the trend in on the daily chart, that's not a stock that fits a long trade. Clear with that, guys? Okay, great. So again, this is a very simple example. Let's go. Let's take a look at a good question. Let's take a look at IMMU because we traded it today. I traded it. Okay, so volume V. What about the daily range? Can you say that this daily range is based on this daily range? It is a momentum stock. Okay, the volume is great. What about the daily range? It is, but not really significant. It's the, according to the volume, which is up, I don't know, 1,000%. The volume is up maybe 50% versus average. The daily range today is 83. 30 to 86.90. Let's say 83 to 87, $4. Okay, let's take an average daily range. It's 40 to 42. So the daily range is twice as much, and the price is twice as much. There is a problem. There is a problem. And if you look at the intraday chart, basically the stock is moving lower for the first 30 minutes and then pretty much dies. There is a reason for that, though. This stock is pretty much a buyout where, for whatever reason, it's still selling off. Maybe because of the big gap. I'm not sure why. Weird. It's something that should not happen, where a buyout is a stock that's, it's should not trade a big range after the announced buyout. Volume is fine, but we're not trading buyout stocks. Again, why there's no range? Volume is the volume is plentiful, but if there's no range, why would we spend time on it? It's obviously not something that we want to trade. Okay, guys, that's now 5:34. Let's take 6 minutes until 5:40. Okay, bring some refreshments. I'm gonna bring myself also a cup of coffee, and we'll be back and continue in 6 minutes. So back at 5:40. Okay, 6 minutes. Okay, guys, if anybody has a question at this point, feel free. We have plenty of time. No rush into anything. Any question? Because the basics again are very simple. The concept very simple. The implementation is not very easy. Day trading is all about execution. So execution is never very easy, okay, in day trading. But the concept is very clear. So if the concept is very clear, that can lead, okay, to implementation. If the concept is vague, the implementation by definition is going to be hardly hardly doable, okay, or basically not very easy to implement. Here the concepts are very easy. It's using on top of all what you're doing so far, meaning using the strategies that you learned during the start of the course, is now applying those strategies to momentum stocks, which again will give you more potential, better potential trades, or more probably more results or better results or more money on your trades. This is why you're spending time every night. Okay, you could be watching Netflix instead of that you are day trading again, which is again very exciting. But you're doing it with a purpose of making money. This strategy is going to help you, okay, perform better. Okay, so basically, it will let you trade alongside institutional traders, because those are the guys, again, let's face it, that are creating those moves in the markets. Again, no questions. If there are no more questions, I can continue. No questions? All right, great. Again, a reminder, those who are sticking with us into the close, that's for more than, I think, an hour and 15 minutes. Fine. If not, you can get the recordings of this session and tomorrow sessions, and of course Wednesday session, just emailing Clifton. Thanks a lot, Andre. We continue. So this is again a very good example of X, May 3rd, 2019. The strategy that was implemented nearly 2 years ago, it's still going very strong today. So this again strategy, trading momentum stocks, is here to stay. It's not something that will fade away anytime soon. Okay, this is something that's going to persevere. Actually, as the markets move higher, going for momentum stock is going to be more and more profitable. Again, it's not necessarily something that or a trade that we need to look for at the highs of the formation. A momentum stock can be a trade from the lows of the year, from the mid level of the year, and of course a breakout trade which will fit everybody's strategy. So the breakout trades also incorporate momentum stocks and the strongest stocks, the winners. Momentum stocks at the lows of the year incorporate momentum stocks and the losers. Okay, if the trade is to the upside, or even if it is to the downside. Anyway, we would like the trade to be with the trend on the daily chart. Nevertheless, if there is a clear momentum, we will trade counter the trend on the daily chart. If the intraday chart is working for us, because we are day traders and we feed off the intraday chart. We are not, like I said before, institutional traders, investors, hedge funds, or Warren Buffetts. We are day traders. Going back to this example in BIG, in big lots, and why is the uptick in volume important? Again, why is the uptick in volume important? The answer to that is very simple. The uptick in volume tells us that institutional traders are involved in the game. Now, we can trade, and we probably will trade, a stock that doesn't necessarily have an uptick in volume if the trend intraday is clear. Okay, but we will trade it with better confidence. Okay, if we see also on top of that the uptick in volume. Now, what are the chances that when the trade is going to work better, with better volume or with lesser volume? The answer is of course very clear. Having said that, here is an example where there is no guarantee that if the volume is up, the trend will work or the trade will work. Sometimes there will be momentum, but we won't be able to trade it. Okay, this is again an example. And what happened today in SGMS? Just write down this example where necessarily, that's a momentum stock that should close at the highs of the day and looks great, but fails. Okay, fails, and the reason why it fails, most of the time the trade will fail if the price action in the first minutes is too aggressive. That can happen. Okay, that can happen. Take a look at another example. This is Biogen on the daily chart, going back to October of last year. Take a look at the daily chart of Biogen, and it's very clear to see that pretty much every 3 months, the stock goes through a momentum day. Every 3 months. Okay, that's mid-October, 3 months later, and those momentum days are necessarily, in this case, either news days or most of the time earnings day. And again, earnings day is a judgment day for a stock where institutional traders will judge their, let's put it this way, their uh, decision to stay, move, add, decrease their position in the stock based on the relationship or the outcome of the test that is being presented by the management. So if an institutional trader is sitting with millions of dollars in BIAB, he'd better have a good reason why he's spending billions of dollars or millions of dollars in a position in BIAB, and the stock moves sideways for nearly 7 months, from October until May 2020. So that's 1, 2, 3, 4, 5, 6, 8 months, the stock moves sideways. And as institutional traders, institutional trader, you need to ask yourself, I'm putting to work millions of dollars in Biogen, and the stock moves sideways for 8 months. During the same period, putting the same money to work in Apple, Amazon, Facebook, Tesla, whatever, in technology, the technology sector yields me 50%. And here I'm sitting giving zero returns to my investors. What's wrong with me? Why am I still in Biogen? So I need to be able to, as an institutional investor, answer this question very securely. Because if not, why am I in BIMB? Why am I not making money for my investors and creating commissions to the firm? Okay, versus sitting in a stock that's asking, plenty of investors will ask them, why are you not moving out of BIB? Why are you not putting money to work in the technology sector or other biotech stocks? Obviously, BIB is a loser in an uptrending market. Okay, the stock is not moving lower, but it's not doing anything for 7 months, while the market during the same period is up, I don't know, 50%. So that's something that is very important. Nevertheless, for us as day traders, we have maybe 3 or 4 trading days in BIB, and that's it. The one in at the beginning of February, where the stock moves from 280 to 380, I think Meir traded it on that given day for, I don't know, huge gain. Okay, but again, Meir traded it for one day. The day after, nobody remembers. In our trading room, nobody remembers Biogen anymore. We're moving on to the next momentum stock. And one of the reasons why we trade the US markets is the US markets are offering us around the clock, pretty much every day, those type of opportunities. Keep in mind, guys, that right now we're not in the middle of the earnings season. September is a month where we hardly have any stocks that are going to earnings. Earnings season starts in October. October 10th or October 15th. So we are pretty much 4 weeks away from the earnings season, and we are still trading momentum stocks. Why? Because the US markets are amazing, but let's face it, we need more opportunities. It's better for us. Sometimes sticking to one opportunity is enough. Now let's take a look at this example. SPC February 18. Again, you can see that SPC goes through months in a row, November, December, January, where it moves sideways. Nobody cares. You can hardly see any volume. It's pretty much going on unnoticed in these markets. Okay? Then something happens and the stock again breaks a round number. In this case, 20. Okay? Then it climbs from 20 to nearly 45. This is, or during the climb of 20 to 45, it goes through a couple of momentum trading days. Those are the days where day traders will make money. However, okay, nothing is guaranteed. So you can have a big range and big volume trading day and face a challenging intraday price action. It can happen. So nothing is for granted. We need to work and earn every dollar based on the strategies that we're using. Sometimes the strategies are working, sometimes they're not working. In the case that the strategy is not working, we apply those, the risk reward strategy. That's always on the table for us. This is Tesla, for example, February 3rd, 2020. Again, Tesla goes pretty much unnoticed through November and December, and then things heat up. And then it goes through this unbelievable trading day, February 3rd. I don't remember the prices, but you can see the range and a pickup in volume and the trend and the way it trades. That's pretty much what a day trader wants to find. A stock that gaps up, the range is 10 times the average range, the volume evidently bigger than average, and now your job is to find an entry point intraday. A breakout, a reversal, a hammer, a bull flag, a double top, a double, whatever. So momentum stocks should be a priority go-to place for day traders looking for powerful intraday moves. Now we're summarizing pretty much the subject. Momentum stocks are easy to spot. I hope everybody agrees that momentum stocks are very, very easy to spot. Okay? We go to the daily chart, there we spot them. If you cannot spot them, it means it's not a momentum stock, pure and simple. Also, we can use the TFS Trader Platform Top 20 Stock Screener. I will go through it in a minute with you guys. Okay? And we trade momentum stocks using two simple trading strategies, reversal and breakout. Breakout or breakdowns. Again, reversals or reversal patterns, you learned during the Star Trader class. Breakout, breakdown, same thing. Now let's see more examples. Breakout on the daily chart, guys. MAN, that's an example from more than a year and a half ago. April 18. If you look at them again, the signal is again on the daily chart. The signal will always be on the daily chart. So you can see the daily chart on the bottom right chart, breakout on manpower group on the daily chart. It starts very early in the morning. The trend continues pretty much all day. And this is how the intraday price action looks. It's not like you have that many trading opportunities for MAN. But the trend is higher, and your job as a day trader is to find one, maybe two trades. Again, sometimes there's going to be only one opportunity during the trading day, or only one great opportunity, and then the trade runs away from you and there's no pullback. It can happen. Sometimes you will miss the trading opportunity. Okay, there will be more opportunities. Again, the idea is not to force anything. Let's go now to the top 20 for a split second. Top 20 here. This is the top 20 of the TFS platform. Again, I'm adjusting it, okay? I know that some of you have intro accounts, some of you have, I don't know, let's not call it professional accounts, but some of you are trading with buying power of $14,000 or $20,000. Some of you are trading with $500,000. Okay, but the idea here is that you can adjust the top 20. Okay, just right-click on the platform, config, and use this $10 plus or all or only $1 to $10. I suggest nobody uses $1 to $10 because you don't want to trade the garbage of the market. If at all you want to trade $10 plus and stick to the stocks that are above $10. It doesn't necessarily mean that there won't be great trades under $10. Some of you posted actually very good trades today in, hold on a second. Let's, for a split second, look at the stocks under $10. VXRT, for example. VXRT, that was this is the pattern of VXRT today, and this is how it looks on the daily chart. So if you look at the daily chart, obviously you can easily see that very early in the morning, the volume is the best volume ever, or near the best volume ever. The daily range is bigger than the average, and VXRT is a momentum stock. Now, if you look at the intraday chart, maybe you can find an entry point, maybe you can't find an entry point, but again, this is an opportunity that should not go unnoticed because the volume bar, the volume is more than 200 million shares. Unbelievable. Yeah, more than 200 million shares traded today in VXRT. Wow, unbelievable. Vaxart. Weird. All right. So going back to the top 20, let me go back to what I wanted to say. I can configure it to $10 and more, okay? $10 and more. And then trade only those 40 stocks, 80 stocks, 20 to the upside and 20 to the downside that fit my strategy. And in this case today, you can see here that we have Tesla, we have OSTK. Scott made money in Tesla and OSTK late in the day. I mean, the ideas are just written down here in the top 20. posted down in the top 20. Okay, I was looking at GRPN. This leg down in GRPN only because on the top 20. Why would I look for GRPN? Nobody cares about GRPN. But if it is on the top 20, probably something good or bad is going to happen. SGMS, the same thing. Okay, I traded scientific games so many times in the past. I remember it positively. Today didn't work out, but it's still number 2 on the top 20 into the close. Also traded IMMU short from the top 20. Also traded Tesla. Let's see what else. NNOX, guys. NNOX again from the top 20. Look at this posted, talked about 54 breakdown. Sorry, 54 reversal trade lower because the breakdown is at 52. But the 54, which was a great trade, actually so late in the day, 3 p.m. Unbelievable. And it closes at the lows of the day. So that was for me missing on a $7 times 600 shares, plenty of bucks, plenty. I can't believe that the stock moves so much. So again, you can see that the combination of the top 20, the ability for the top 20 to locate for you the momentum stocks, okay? And for you to locate clear intraday patterns and trade them on the intraday chart, that's pretty much the business of day trading. That sums up day trading. Now it's all about execution, okay? Now, is the execution very easy? Obviously not, okay? But if you can make them down from 54 to 48, $6 in less than an hour in NNOX, nobody's gonna put money into your account without taking some risks. So again, I'm sorry that we missed NNOX. There was a good reason for that. But some of you, I know that at least one person followed up on NNOX and traded it. That's an unbelievable leg down into the close. Guys, again, write down Clifton's email just for your records. I'm sure that most of you do have it. And if you need the recordings today, tomorrow, and Wednesday from this session, training session, just email Clifton. All right, back to the presentation. Again, before I move back, I'm calibrating or adjusting the top 20 to stocks that are $10 or more. Those who are trading, intro accounts with only $14,000 worth of buying power, I suggest in this case you use also the small caps, but don't look only at small caps. That's a mistake. The small cap world is the worst and toughest world to trade. Why would I use Colmex Pro? Whatever Colmex Pro means, I don't know again what is Colmex Pro, but the new platform you mean? If it is the new platform, I'm already using the new platform. I'm using the new platform. I have an account on the new platform. I just prefer to trade the old platform because I've been trading it for, I don't know, 7 years, 10 years. But for a beginner, I don't think there's a big difference between, if you have a good computer, there should not be a big difference between the old and the new. The only difference right now is that you cannot access IPOs on the new platform until a day or two after the IPO. That's for whatever, I don't know, issues that are with that platform. On the other hand, you have other benefits, chart trading, going long and short at the same time. So there's more flexibility. So it's nothing is 100% great on one side and left with nothing or weak on the other side. So there are pluses and cons for every trading platform. But the execution is as much as I see is very good on both. Like I said, that's the platform that I feel comfortable with. For me, the chart trading is not a big deal. I would love to have double-sided trades as well. Yeah, you can go long and short. For example, on the new platform, you can go long and short at the same time. Okay, and one will close the other. Yes, which is impossible to do with the old platform. Like I said, there are benefits to one platform versus the other. And however, again, I have to say that the new platform needs more resources. It's a heavier application, and you need a good computer and a good and a strong internet connection or reliable internet connection. If you have those two combined, the new platform is a very good setup for you. As long as TFS is offering both, I will prefer still because I'm so used to it. The old platform, I'm also familiar trading it. It's very fast. Yeah, I mean, like I said, again, let's not steer away from our business, which was again talking about the top 20. I hope that again it's clear. I suggest again those who have enough buying power, meaning at least the student package. I suggest you use the top 20 and use the stocks above $10. If you are trading the intro package, only $14,000 worth of buying power, and you wanna, you have the ability or wanna trade small caps from time to time just to feel the power of buying, a big position. That's also available. But I suggest you definitely don't stick to small caps. That's something that I used to do in the past, and it was a huge mistake. Again, if you stick with small caps, you're basically telling yourself, I'm going to eat the crappy meals. That's the cheap meals without, uh, without giving yourself a chance to eat a Tesla. And even a 10 share Tesla today up $50 is a lot of money. That's pretty much better than most, if not all of the small caps on the platform today. Okay. So again, let's go through some more examples. And guys, if anybody has a question, feel free to stop me at any time. I will go with them very fast. We still have 40 minutes today. Take a look, guys, at these examples for 3M days. Okay, where 3M is a momentum stock. And 3M is a momentum stock when the volume and the daily range are converging to be at least 2 to 3 times higher versus the average. And then you have a chance to have a trend lower or a clear trend higher or lower for the whole of trading day, meaning clarity. And if you have clarity on the intraday chart, your chances of making money from that chart increases versus when you have zero clarity or trend changes or many trend changes on the intraday chart. Okay, so trend changes on the intraday chart means less clarity. Less clarity, less chances of making money. Less chances of making money, not good for a day trader. Okay, good trend or clear trend or one trend, at least you know what is the trend. Okay, so even if you are a beginning trader, a beginner in the business, and you know that the trend is lower, obviously you're not going to start buying. This is again deducting or approaching the better basics for each trade only because you're looking for momentum stocks. Okay, momentum stocks are clarity. Okay, it's clear. If it's not clear, it's not a momentum stock. Okay, because the momentum stock needs to stand out significantly versus the rest of the trading days in an individual stock. If it doesn't stand out, guess what? It's not a momentum stock. You shouldn't be trading it. Move on. You have 10,000 shares and at least 80 posted at any time on the top 20. At least 80. For example, take a look at this one. HRI April 18. The stock breaks out on the daily chart. Okay? So it has better than average trading range. What about the volume? Okay, we need and we want to see better volume than average, but when the volume is below our threshold, and our threshold for good volume those days should be, I want to say 500,000, but I'm not up for that anymore. At least 1 million. Okay, the volumes are so great. I mean, there are so many trades, so many stocks that develop very good volumes. So for me to trade a stock that trades only 500,000 shares, the intraday pattern needs to be, wow, perfect. Now, if you look at this stock, the stock trades less than 300,000 shares the whole trading day. So if you are encountering this stock intraday, and now the stock trades 100,000 shares, it is on the top 20. Okay, it is on the top 20, and it is a momentum stock. It's still below our threshold as a day trader. We stay away from it. Most of the time, those are going to be lousy performers, because what it means, only 300,000 shares, it means that there is no fight amongst institutional traders for this one. Okay, a fight means millions of shares. Here we have something that's nonchalant, barely moving higher, or moving higher on no volume or no relative volume. We as day traders would love to see more volume. More volume means more liquidity. More liquidity means less spread, less slippage, better trading environment for everybody. It's not institutionals are not interested. Again, I'm not checking, Jorge, if how big is the institutional play in HRI. I'm not going to move away from the trading platform, start looking at Yahoo Finance. Then I'm going to check how many institutional traders are in HRI, how big is their positions, what is the percentage. That's not the business that I'm doing intraday. Okay. Again, for me, I have to have clarity. Remember what we said just one slide ago. Clarity is important. You know exactly what's right and what's wrong. Okay, so if the threshold is 1 million shares and the stock trades 900,000, fine. Okay, but if the threshold is 1 million, this one trades 250. That's not going to cut it. Despite the intraday pattern, despite the daily pattern, despite whatever. Okay, so maybe you do want to trade it, okay? But in this case, I suggest take into account lower volume. Okay, so instead of buying, I don't know, 500, you buy 300. So it's never, write it off and don't trade it. Okay, but it's still 300,000. Now, if the number is 50,000, I would say trade 0 shares. Okay, so if the threshold is 1 million and the stock shows 250,000, and you want to take half of your position or a quarter, fine. But if the stock trades absolutely no volume, you need not be as a day trader in that stock, because you're not going to trade, very very small positions with associated with the risk and again commissions and slippage. The idea here again is not to spend time on HRI. Okay, you have a limited time frame to day trade. That's 6.5 hours per day, ignoring the first 15 minutes and the last 15 minutes. So you have 6 hours. You're taking maybe a 15, 20 minutes break. So you have 5 hours and a half. That's, a limited time where you can find trades. So if you have limited time, limited resources, don't spend your time on unclarity. That's pretty much the idea. So spend your time wisely, meaning give up on HRI, or work with it very very fast and move on, or start looking for better stocks, better movers. This is an example where everything is okay, but volume is in this case, a drag for this stock. Or you have this type of trading day, okay, where the stock is gapping down. It has a big leg down. Volume is better than average. The trading range is obviously not very good, but you think it's a momentum stock because it had a big gap down. Again, a big gap down is not necessarily, or a big gap up is not necessarily momentum stock, because we don't include the gap in the number of the daily range, okay? We just look at the bar, okay, and we see pretty much like what looks to be a dodgy day. Okay, so in this case, the gap up, or in this case, the gap down is an illusion. It's not something that is helping us reach a better decision. Now, if you look at the intraday chart, you see exactly what I mean. I mean, the stock is basically moving sideways for 5 out of the 6 trading hours. Good luck making a buck on BYND February 28. Not very easy. Maybe you can, but again, you're spending time and resources on maybe most of the time it's going to be losing your money, while you have 10,000 other stocks to look for. Okay, so you have alternatives, and it's your decision or decision-making process as a day trader that will bring you into the clarity trades and those trades. If you are not really, really picky, okay, and fall for those unclear patterns, guess what? The results are going to be accordingly, meaning very, very vague and unclear. Okay? If you stick to clarity, which means you work more, you search more, you dedicate more time to searching, you will find that one trade that's going to fit your strategy, and eventually will be also a very good intraday mover, which is the purpose of us spending 6 hours or 5.5 hours every day in front of the charts. Okay. Another example, guys. This is a stock that was traded in our trading room. I remember this one. Okay. Roku, February 14, 2020, gaps up on great earnings, but the result is that the stock creates an engulfing on the daily chart. Guess what? Those who took the start trader class, look at the result of this engulfing. The stock creates an engulfing and then trades lower 5 days in a row before reversing. So everything is here. A momentum stock, an engulfing that leads to continuation downside the day after, Okay, but is this stock an easy trade after the gap up? If you're looking for a gap up and go, look at the price section. Okay, if you look at the price section, you understand that there is no gap up and go, and it's still a momentum stock. A momentum stock doesn't necessarily mean that you follow the trend in the first 5 minutes. The trend can change. The idea is to find those stocks that have lesser trend changes versus the average. In this case, the trend is lower pretty much since the first, let's call it 30 minutes. There's no more move over the VWAP. Actually, the stock is not even closing at the VWAP area for the whole trading day. And it was shorted in the trading room. I think Meir or Scott traded this stock short. Roku short on February 18, made a killing on it. Again, why? It was the right call on the right stock. Momentum day, triggered by earnings. And why did Roku move lower, in this case, $20 intraday? That's beside the point. We could care less. I don't know why, and I'm not going to search why. Okay, there's a good reason why institutional traders dumped the stock immediately after it created the leg up. Probably they didn't trust the continuation in the stock. And guess what? It still continued to move lower 5 days later, which is beside the point. The idea here is for us to take advantage of the momentum trading day, which is a significant and easy to see on the intraday chart. And it's obviously very, very easy to observe on the daily chart. Okay? On the daily chart, you can clearly see very early, very, very early, the gap up, the start of the move lower, the increased volume versus average, and then you switch to the intraday chart, and then you look for help, or basically the trade, or the entry point. Now again, those are there are examples where the stock looks to be moving down amazingly on the daily chart, but if you look at the intraday chart, the opportunity lies there for maybe once one good trade all day. It can happen. So momentum stocks is not necessarily a bonanza where you have plenty of trading opportunities. Sometimes the trading opportunity goes away very early in the morning. Sometimes you wait for it 3 hours. There are no guarantees. You do have to work as a day trader, switch around and move around and fight for those winning trades. In this case, GPC, the stock is gapping down. It's losing $6 or $7 intraday, but how many, let's face it, how many entry points do you see on this chart? Maybe one at 107. Again, the idea here is that you look for clarity. Okay, if you can find an entry, fine. If the entry is nowhere on the chart, you move on to the other chart. You don't stick around and force a trade. That's the idea. You need to find the trade that will be the trade that will have everything, meaning the increased volume, increased trading range, and the right trading pattern that fits your strategy. In this case, CGC. We don't trade CGC anymore, but at the beginning of April 2019, the stock was nearly $50. You can see that in this case, the stock gaps up and then turns to be a loser and or selling off. And the only trade short was pretty much the reversal under 46 short. Again, the idea here again, Randy, is sorry, Jorge, is to find clarity. And is this CGC trade showing clarity? Is the CGC trade, despite that you can find, it's not showing clarity. Okay, any stock that moves sideways for 4 hours and then creates a leg down, counter the daily trend, it's not really what we want to see. Okay, we want to see those that are moving with the trend, are creating us a couple of entry points, and are sticking to the trend. This one gaps up, moves sideways, shows the move up and then moves sideways again, and then finally breaks down. So there's not that much clarity in this one. Or for example, Boeing April 18. If you look at the daily chart, if you look at the intraday chart, you see what looks to be a dodgy day. How many people today pointed me to trades in stocks that look like a dodgy? I hope that some of you guys that pointed me to trades on stocks that look like a dodgy on the daily chart are now taking this class. Because now after this class, you won't look at dodgy or narrow bars or small bars, no volume on the daily chart and try to buy them intraday or try to trade them intraday. Because this is not the right place to be. This is not the clarity that you want to see. Okay, so no clarity on the daily chart. Plenty of times, or most of the time, there will be no clarity also on the intraday chart. So why force a trade in Boeing where your chances of a good move are, let's face it, low from the beginning? Why? Because institutional traders are focusing on other trades today, are focusing less on Boeing and more on Tesla today, that given day, for example. So the idea again is not to force anything. If the daily bar is not showing a momentum and it looks like more like a dodgy or a narrow range bar, guess what? No clarity, you move away. I forgot to write down the name of those guys. I will do it again tomorrow. I'm sure there will be plenty of guys that are not taking this class. Okay, that tomorrow we'll look at the daily chart and will trade most of the time unsuccessfully a type of a trade like Boeing today. Like Boeing April 18. Again, the idea here is it's a big mover. It's a Dow component, but it's really not tradable. The reason for that is that you look at the daily chart, you see what's going on. Most of the time, it's going to again translate into the intraday chart. What's the best time to make your watch list? The watch list is being updated all the time. Okay. So, for example, on my watch list, I have constant stocks on watch list, on one watch list, and another watch list where I alternate momentum stocks. Okay, so the momentum stocks change. For example, today NKLA is in there. Hold on a second. I will show you what's in there. Why do I need to guess? This is the alternate list. Okay. Now you can see I switch and arrange it. Of course, it's going to be IMMU, VRTX. The guys talked to you. You talked about it in the room. DKNG, OSTK, PEN, ENO, BKE, Moderna. Those are, you can hardly find a stock that's up 1% on my chart. So if a stock is up 0.5%, up 1%, I'm just taking it off. So for example, Etsy, I don't know what is on my watch list here, maybe from a couple of days ago. But most of those I traded. I traded EMU today. I traded ENO today. I wanted to trade BEK today. I traded Moderna today. Um, and I wanted to trade NNOX today, and I traded CLDX today. So those are the stocks that I'm trading versus there's something cooking. Again, I'm using only two watch lists. The constant one, and again, if you need them, if you want me to send you my constant list, you can email me. The idea here is, again, that you have a constant list and another one that you alternate and change every day. Okay, and you move the stocks that are relevant to your trading into that list. Very, very simple. Again, everything should be very, very simple. Okay, you have only one that changes every day. Make also a constant list where you have some ETFs, some benchmarks. Okay, so you'll know, for example, which is the strongest sector today. If you know that the biotech is the strongest sector today, maybe you would incline to trade biotech stocks. Or the weakest sector today, for example, energy, maybe you short some energy stocks. Again, it's not a must, but it's for you as a beginning trader. Okay, guys, let's take a look at this example. SKX catches April 18, 2019. The stock gaps down significantly on increased volume and increased trading range, and basically trades higher between 9:30 to 10:30, straight up, after a gap down. Okay, so if you are a good day trader, you can observe this phenomenon and buy Skechers despite the gap down. Okay, so now would you buy it at 30 or 30, 50 or 31, and what is the risk? That's beside the point. The idea that is that you, using a very, very simple strategy, can locate SKX as a trading opportunity and then trade it, maybe during lunch, maybe early in the morning. Okay, but the trend is higher despite the big gap down. You join the intraday trend. So the daily chart is suggesting here that it is a weak stock after a big gap down. Okay, the intraday chart is suggesting a huge move higher. What are you, an investor or a day trader? You are a day trader. Therefore, you look for a trade as a day trader, and if there is momentum, and there is momentum, and you can see that on the chart, that's probably the best volume in months. The daily range is also the best daily range in months. So there is work for you, cut out for you to find an entry point with the intraday trend, not with the daily trend. That's pretty much the idea here. Okay, so I think we covered most of the bases here. Momentum stocks are to be traded, okay? Based on the intraday chart, not based on the daily chart. But you don't need to trade something that's not clear enough. If the daily chart is clear and the intraday chart, which is the one that you really want to trade, is unclear, guess what? You switch away, you move away and look for a pattern where the daily chart is clear and the intraday chart is clear. So you need to spend less time on the daily chart and spend more time on the intraday chart. Okay, because this is where we make our money, trading the intraday chart. The daily chart is not our forte to trade. We want to trade the intraday chart. This is why we spend so much money in front of the charts, so much time is in front of the charts every day. Okay, so this is the summary for trading momentum stocks. They need to create a big uptick in volume need to develop a significantly larger than average trading range. All other trading parameters, and this is super important, guys, all other trading parameters must be checked as positive, meaning spreads, clear trend, risk reward, technical pattern, volume, timing, sector match, market support. So I'm not going to buy or short a momentum stock if I don't have the market support. It's not going to work. Okay? Momentum stocks are not stronger than the S&P 500. And if the S&P 500 is moving lower and I'm trading a momentum stock higher, the outcome probably is going to be a losing trade. So I cannot join a momentum stock higher if the SPY is moving lower. The idea in this case is to join a momentum stock lower. That's the idea. Do not fight in the name of a momentum stock the daily trend. That's not going to work. And again, remember that momentum stocks are signals. They are not entry points. You need to fight and learn and work and observe and eventually trade the intraday chart and locate those entry points, because momentum is not necessarily an entry point. It's actually not an entry point. It's just a signal that points you to a better solution as a day trader. Now, what is the reason behind the big day in individual stocks? We talked about that. Most of the time, it's going to be a better or worse than expected earnings report. And the outcome of it is institutional traders moving big chunks of stocks in and out. If the result is good, they will join. If the result is not good, they will leave. If the result is questionable, nothing will happen. So we need to pick those that are significantly better or significantly worse. Short the worst, buy the better. That's our job. So the reason behind the big day, most of the time, earnings, good or bad. A news release regarding the launch of a new product or service. For example, the TikTok mania in now it's in Microsoft and in I don't remember what other stocks are interested, but there is some TikTok mania, and that's news related, has nothing to do with earnings. Okay? Regulatory news, or to a lower degree, upgrades, downgrades, exactly what happened in Citigroup today. Regulatory news where the SEC is probing Citigroup for whatever wrong they done to their customers, or to the markets, or to both. You can expect anything from those guys. And sometimes a reason behind the big day is going to be a recognizable pattern in a market leader. For example, the breakout in Apple over 400, if you remember it a month ago, or the breakout of Tesla over 1,000, and many others. Sometimes they also fall into the category as being momentum days. Okay? Most of the time, though, and this is, of course, something that's very, very clear, momentum days are going to be a byproduct of earnings. And the earnings season is pretty much the best season to hunt for momentum days. Right now, the market is not going through an earnings season. Guess what? We still have plenty of momentum stocks or momentum days on the top 20. Now, acting on momentum stocks, intraday scanners will pick the majority of momentum stocks and list them accordingly. The TFS top 20 included on the new platform. You have also a scanner. I don't remember how we used to call that scanner, but the TFS Evolution or Colmex Pro Plus, or I don't know how we call those, the new platform. It has a couple of names. There is, again, there is a scanner there, okay? And the scanner there is not divided between the NASDAQ and the New York Stock Exchange. It's a bulk scanner. just as good. Okay, just as good. And we create a watch list on the TFS platform dedicated to momentum stock. Exactly the example that I talked about 5 minutes ago. A changing watch list where you have stocks that have a significant um, are going to a significant momentum today, and tomorrow most of the time they will be out of the list, and you bring some new stocks in. Okay, so the list today and the list tomorrow should not have the same stocks. Maybe one of them will continue to be momentum stocks. Most of them will lose the momentum status, and you replace them with others. Don't bring too many stocks into the list. Start at the beginning with 5 to 10. Okay? Don't bring too many. Be very picky. Bring only the best of the best, and don't bring too many because you don't want to spend time on the mediocre momentum stocks. You want to spend time and effort and try to trade those that are the biggest mover, the best potential, the best trades, the best setups, and it takes time for you to find them. Okay, so you need to spend quality time to find the quality trades. Don't browse too many stocks. Okay, then you'll spend time browsing and not trading. And that's why I said here, keep no more than 5 to 10 stocks on the list. I have maybe 15. Okay, but a beginner will start with 5, and then you feel comfortable with 5, and you feel that you're doing the right thing. You add more, but you don't start with 30. Because in this case, more is less, okay? And you spend the time searching, the time in the trading day goes by, you don't have any trades by 2 p.m. and then you panic and start trading the not the right stocks, okay? And sometimes it's late. Okay, why do you not in a trade? Because you are browsing, searching and looking instead of focusing. And most of the time, by the third day, most of the momentum stocks will be in your list for a day or two. 99% of them will be out by day number 3. Day number 3, out. Unless it's Tesla, then you stick to it. Summary of the benefits of trading momentum stocks. A unique opportunity for day traders, guys. Remember, we are the only ones that can take advantage of institutional traders moving in and out of stocks. That's pretty much the momentum. Okay, when they gather and fight for positions, this is where we can take advantage and get long, and the other way to get short. Without, and we're doing it without basically changing our strategy. Our strategy is always the same. Reversal trades or a breakout trade or a bull flag trade, again with a manageable risk reward. There's always something that is on the line for us. That's the risk and reward. Every trade has its risk and its reward. Okay, and if the risk is reward is not even 1-to-1, no way we're taking this trade. However, again, if we are smart and we're trading the right momentum stocks, sometimes early in the morning we can easily hit 3-to-1, 4-to-1. I don't want to say 10-to-1, but it can happen. A 10-to-1 risk reward trade intraday can happen for you guys. Once a week can happen if you're focusing on the right stocks. Again, today it was very easy to focus on Tesla, not very easy to trade, okay? All other intraday attributes should fit the trader's daily strategy. So if you have a strategy that's working for you, it should work under the momentum stock search strategy. So you search for momentum stocks, apply your normal everyday strategy now to momentum stocks. It should work better. Unless your strategy is to trade stocks that are not moving, which is also a strategy. Now, I traded this strategy. There is a strategy to trade the US markets where you make money when stocks are not moving. Okay? How do you do it, guys? Anybody has an idea? We're going to spend, I want to spend on it less than a minute. No, not options. Trading stocks, okay, that are not moving to make money. How can you make money if the stock that you're trading is not moving? Does it make sense? Can anybody? Okay, but how can you make money if the stock that you're trading is not moving? And the idea indeed is to take huge positions for very, very small price changes. Okay, that's a strategy that I felt very uncomfortable trading. No, not it's not around support. The idea again is to trade, for example, 10,000 shares or 100,000 shares for a half a cent move, half a cent move of 100,000 shares. That's I think $500 or $5,000. I'm not sure. It's not very risky. The risk is very little because there's no movement. It's very hard to implement. Okay, but it's not very risky. Anyway, thank God it's not our problem today. Now, our problem today is to buy Tesla and it moves $80 intraday, and we don't need to worry about stock that move only 2 cents intraday. This is a strategy that was applicable 12 years ago or 15 years ago. It's not something that I think is applicable anymore. Again, another pandemic means that the Nasdaq is going to go double again, because the Nasdaq is actually making more money when there's more panic in the markets, and people are buying like crazy online, and the schools are closed, and Zoom is working. I don't know, around the clock, global wide, with absolutely no stoppage. That's pretty much technology. Okay, guys, let's move on. We have a couple more minutes. Now, again, this is an example of Disney on April 12, a year ago, 2019, where you can see that the stock gaps up on huge volume, okay, but it's not developing a great trading day, okay? That was the announcement, if I remember right, of Disney Plus a year ago. Then the stock creates a pattern on the daily chart. Still, it's not a momentum stock unless you enter on the first day. However, you can take advantage of this momentum without trading it and try to join the trend, okay, using the pattern and the momentum without you actually trading the momentum day, okay? So sometimes the momentum continues a day or two after, but again, the idea here is that you use or take advantage of the gap up and go and the big momentum bar to maybe enter the day after, okay? If you can find the right, again, entry points. First day up and still going 5 days later, fine. Okay, so if you're in the trade first day, good for you. If you're not in the trade first day, still there's leftovers. Some of the time there are leftovers for more continuation. PCG. This is a stock that we traded many times last year, especially after the fires in California. And you can see that a momentum stock up turns into a momentum stock down. So in this case, this is a very rare occasion where a momentum stock turns from up, and then a momentum stock is turning to down, and you can follow the trade and follow it for, in this case, 5 days. I think this is that was at that point PCG was on fire. Okay, up and down, and it's like I think Moderna. If you look at, guys, I won't spend time on it right now, but if you look at the Moderna chart, mRNA, you'll see that the stock was a momentum stock, sometimes for 10 days in a row, sometimes for 5 days in a row, but the momentum did not fade. Again, why? It was the right stock in the right timing. PCG had to do with the wildfires in California, and many people and the property destroyed, and of course mRNA because of the COVID-19 issue. You know what, guys? Let me see if I have one more example, and we should be done for the day. We did very well, actually. I wanted to close the whole 40 slides, but we did 35, so we're still good. We're going to pick up from here tomorrow, guys. Slide 35, some more examples. Now what I want you to do, or hope you will do, tomorrow we resume at 4:05. Try to bring to the table one momentum stock that you traded tomorrow. One momentum stock that's fitting our strategy, that it's a real momentum stock, and it's yours. It's not from the room, it's yours, to find and develop and trade, and then we can discuss it decide if it was, the right trade, the right momentum, the right entry. Again, one stock per each trader here in the room. We will be able to do only 3 or 4. We won't have time for more, but as much as you can, guys. Tomorrow, again, one momentum stock. That's of course a successful trade. You prepare it and they trade it, okay? And we discuss it after 4 or 5 tomorrow in the afternoon. Guys, at this point, if anybody has a question for me, that's the time. Hold on, I didn't write my email, but do take advantage of that if you have any questions that's, maybe popping later. That's my email, michael.o. Oh, wow. Okay, missed the MICH. Okay, that's michael.o at tradenet.com. So if anybody has a question now, or if you want to email me, that's even better. And we pick up from the slide number 35 tomorrow. Thanks for being here, guys. Have a great afternoon or night if you are in Europe. And Clifton, thanks a lot for being here. And we meet again tomorrow, guys. Good night, everybody. Guys, the charts were had a very good visibility, didn't they? Because I didn't go straight to the platform, to the application. I went straight to the trading room, and I think the charts are better, have a better visibility in the room. That's my impression at this point. If not, just let me know by email. And again, have a good night, and see you guys tomorrow. Thanks, Tony. Have a good night.